Greetings, I'm Shaun Pruitt, Zacks equity strategist, and today I'm going to be discussing whether investors should still be hyped for Shopify stock. So although they share different roles in the broader digital shopping ecosystem, the hype for Shopify's business commerce platform has often mirrored the excitement for Amazon's retail endeavors. And in fact, over the last 3 years, Shopify stock has skyrocketed more than 400%. Leaving the very pleasant performances of the broader indexes in the dust, and even Amazon's plus 175%, which you can see here. And the provider unique tools that allows businesses to build and manage their online stores received more momentum after announcing a partnership with OpenAI in September to integrate commerce directly into ChatGPT. However, Shopify posted Q3 earnings on Tuesday this week that were favorable but underwhelmed the market's growing expectations. So product innovation did boost Shopify's merchant activity, and making its platform more attractive to merchants. Shopify's commerce operations have been enhanced with AI tools, payment installments, and expanded point of sales capabilities. And reflecting strong consumer demand and merchant expansion, Shopify's Q3 gross merchandise value increased 22% year over year to $56.2 billion. And Shopify's subscription revenue grew nicely as well, fueled by growth in monthly recurring revenue, which soared 25% to $142 million. And furthermore, Shopify's top line expanded 32% to $2.84 billion, beating Q3 estimates of $2.75 billion. But following a tougher operating period to compete against, Shopify's Q3 earnings of 34 cents per share dipped from EPS of 36 cents a year ago, but were in line with the Zacks consensus. And despite Shopify's weaker profit, its ability to convert revenue into operating efficiency and reinvestment capacity was on display. So sometimes the retail investors don't always understand why the hype from Wall Street and institutional investors can further propel a stock. But Shopify is showing strong efficiency metrics. And to that point, Shopify's free cash flow spiked 78% during Q3 to a $507 million compared to $285 million in the comparative quarter. And even better, this marks Shopify's 9th consecutive quarter of double-digit free cash flow margins, with Q3 FCF margins at 18%. And more compelling is that Shopify's FCF conversion rate, its free cash flow conversion rate, is well over 80%. Illustrating the company efficiently turns its operating profits into free cash flow, which you can see here. It's about at the 130% or more mark. And bolstering Shopify's efficiency and financial health, its return on investment capital, or ROIC, is typically between 14 to 19%, with a 10% or higher mark, reflecting strong ability to turn capital investments into profits and alludes to long-term profitability and value for shareholders. So Shopify's Q4 guidance and outlook, and emphasizing strong momentum heading to the holiday shopping season and continued investment in innovation and global expansion, Shopify guided Q4 revenue growth in the mid to high 20% range. Additionally, Shopify expects to maintain full year free cash flow margins in the double digits as well. And based on Zacks estimates, Shopify's top line is expected to expand over 20% in fiscal 2025 and fiscal year 26, with projections edging north of $13 billion, which you can see here. And taking advantage of its rapid sales expansion, Shopify's annual EPS is now slated to be up 11% in fiscal year 25, and is projected to increase another 21% in fiscal year 26 to $1.76 per share. So stellar growth is on the horizon there. So just a conclusion and some final thoughts here. At over $160 a share, Shopify stock is commanding a noticeable forward earnings premium of 110 times, but its efficiency metrics are reason to believe the business commerce leader will grow into its lofty valuation, just like Amazon has. And in this regard, it's important to note that Amazon went public more than a decade earlier than Shopify. So for now, the hype for Shopify stock could still be on, with SHOP sporting a Zacks ranked #1 strong buy in correlation with an EPS revision trend that has supported the company's enticing growth trajectory. Again, I'm Shaun Pruitt, Zacks equity strategist. I hope you enjoyed this content. For more, please feel free to visit Zacks.com/promo.